Wait, what? God, dude. I'm so glad you're on a paper account right now. This has got to be one of the, I think, the most detrimental things that could happen if you're trading on a live account. All right, Josh, so it has been 3 weeks since I kind of let you go out on your own and start trading.
Mm-hmm.
Obviously, you've been trading on your paper account, and it was Christmas break, so you didn't trade through Christmas.
No.
So you really have only had like probably a week of actual trading time.
Haven't done a bunch of actual trading.
I think today it's not like the point isn't to go through all these trades you've had. I want to address any problems that you've run into and really just work through a couple issues that we've communicated. But I think making this a video is worth it for everyone else out there who's been following along in the series, because there's the beginner mistakes that, you know, everyone's inevitably going to run into, and you've run into all these mistakes, or a lot of them at this point, just in a week or so of trading on your paper account, right? Let's not focus on the P&L or your how many trades you've won or lost, and you don't have many trades. Let's focus on like kind of these mistakes that you've run into already at this point, kind of beginner, like I said, mistakes.
So first mistake off the bat I made, I did a put on Uber. I didn't give myself enough room for my take profit or stop loss. I put my stop loss like right at the all-time high for the all-time high pullback.
Okay.
So I hit that all-time high again. I sold. I got out of it.
Yep.
And then it ended up crashing after that because, you know, you have to give it a little bit of time to probe, which I learned after.
Okay.
After that.
That's a good point. You learn, and some of the things, even though I've told you like some things, and that specifically, obviously, like when you go to set your stop loss or take profit, you want to leave some area on top for the market to probe and retrace, or probe and remount, whether you're long or short. And so in that scenario, you just had to learn. You had to go through that. I know that was, what, 2 weeks ago, but we could maybe give everyone kind of an idea.
I think I had a screenshot of it. All right, I know I took a screen recording, but so I got in right here, 62.99.
What day did you enter? This was the exact day you entered? Hard to tell looking back in the past.
I got in around here.
Okay.
At that 62.99, 63 area.
Yep.
And then as you can see, it kind of broke above.
Yep.
So that new all-time high is 63.53.
Isn't that interesting? The 4 hour ended up closing below that all-time high, the previous all-time high, right? Closed below. You can see the body of that wick. So the top of, or you can see the body of that candle, but the wick of the candle did break above that all-time high. It ended up probing that area, broke it, and then retraced below. And so what you did, you're saying, is you stopped out when you should have given the market a little area. You should have given the stock specifically a little room to kind of like do that actual like probing of that resistance in that case.
Yeah.
And then you can see the 4 hour wick, you know, we ended
Falling
up,
back down.
the body of the candle on the 4 hour ended up closing below that resistance, that previous resistance, right? That was just broken. So
That was the first big mistake I made. Just not giving myself enough wiggle room.
And then this trade would have played out very well in your favor, and you would have ended up making a lot of money.
Yeah.
Essentially, is kind of what you're getting at.
Yeah.
Yeah, it would have been a good trade. I
Yeah,
mean, if you
it would've
entered there, you would have every day been in the profit.
Yeah. Live and learn.
That's okay. That's
Yeah.
all good. What was your target back then? Do you remember? Was it at the 50 day? Is that kind of, you were eyeing the 50 day?
I think it was the 50-day, yeah.
So one thing we need to
Area.
work on is your bookkeeping. You should have screenshots. You should know all this. You should have that trade plan in place. Do you have any of that in your trade journal? Or is that something we need to kind of focus on maybe a bit too today? There you go. You've got it.
I have it.
You have it. Full screen it. All right, so you did screenshot it. So I guess we'll work on building out your trade journal so you can have all that data in there. So you could see exactly when you entered, and you're saying your stop was set at 62.99, and it should have been set a little higher, and your
then
target was the 50. And so that trade would have played out in your favor. But that's okay. That's fine. That's totally fine. Again, we're trying to. This is the whole point of paper trading right now. Is not just to obviously collect that data. Like, we're not trying to make money. You're trying to learn all these things that you otherwise would have to learn through losing money on a real live account.
Yep.
So by no means is this negative or a bad thing. This is exactly why we're doing this series, and making the progression like it is in this series for you and everyone to learn. So no worries. It is all good. Let's get this screenshot though in your trade journal. And I don't want to jump around too much, but this video definitely will have a little less format. So if we want to head over to your TradeZella, which we got set up in one of the previous episodes, this is the journal you're going to be using to track all your trades and data. Right now, obviously, you can see you've got your Uber trade in there. So you got your entry. So if we go to executions, because it's a paper account, you can't actually have the CSV. You can't export the CSV because it's paper. Did we figure that out? Are you sure?
We can try.
All right, so within your trade journal, we can see here is your trade you took on Uber. So obviously, you know, we can see you're short. You lost $24 on this trade. Totally fine. Essentially, this will give you kind of all the info you need moving forward, or just to, you know, summarize that position. So you can see your average entry was at 285 and your average exit was at 262. And then if we want to, we can add, and this is what we're going to do for all of them, add this trade to your playbook. So this was the ATH pullback.
Yep.
Okay, so that should now be in your playbook. And then you've got this too. So want to run through this real quick, kind of the entry criteria and the trade management. The overall trend was bullish, right? And then at the time of entry, let's pull up that screenshot again if you could. All right, and then at the time of entry, you can see we were sitting at or slightly below that all-time high, all right, at 62.07. You took that screenshot right around when you entered, so the all-time high was also just formed. Now these are the boxes we want to check before we enter the trade, but we're kind of getting your data all in here and just, again, making sure that you're on the right track. So not that this entry criteria specific to this setup, and if you guys want to copy this checklist, you can. This is for the ATH pullback, the entry criteria. Obviously, I teach all of this over inside my master class. This is all very formatted and structured. This is one of the things that we just couldn't get on camera. But within Josh's playbook, obviously he's got the setup, and then within the setup, we've got these playbook rules, or these setup rules. Now, you don't have to check all of them. The whole idea is that eventually we'll have enough trades where we can look and specifically see, based off of the way you manage a trade, what is the win rate around that. So, for example, the intention here, and correct me if I'm wrong, was to short off that all-time high and then short play that break below the 15 and short to the 50.
Yep.
And so the trade management was a break below 15 short to 50. Unfortunately, you did end up losing that trade. That's fine. And then we could say, well, was the 15-day respected? Looks like it was. 50-day, yes. It was a great chart. So respected. So these are all the boxes. The more boxes within the entry criteria, now this is before you enter, the more boxes you can check off, the better. It's not that you don't take the trade if you can't check them all off, but like I said, just the more the better. So those are kind of the, you know, 5 different criteria that I'd look for within a chart when it comes to actually trading that ATH pullback setup. Within trade management, there's 1 out of the 4 that you're going to choose. So this was break below 15, the 15-day EMA, short the 50-day SMA. So that's great. We've got your executions, obviously. This is pulled straight out of your broker and has been imported into here. Now within the attachments, we want to put those screenshots that you took. So if you want to do that real quick, you can. We've got Uber logged. So let's log the next trade you took. So we know what you learned from Uber, obviously. Let's talk about 1 or 2 more positions and what you've learned from those. And then if you have any questions, feel free to ask.
Okay.
So what was another trade that we want to get in here? And after this, I want you to log all your trades now that you know how to. We just kind of covered that and get them all in here, okay? But we want to keep your books. This is your bookkeeping for your business that you need to have done. What's another trade you took? So you're currently in ticker symbol NVDA. That was an all-time high on the 4-hour. We obviously are trading right above that all-time high. Looks like on the 1 minute, you can see we ended up just really breaking out aftermarket. So we'll see what happens tomorrow during pre-market. You're giving this thing a little room, you know, lesson learned from Uber to you know, give the stock a little time to probe that resistance area. And then it'll either retrace or not. So tomorrow you're either going to stay in the trade, it's going to pull back below, or it's going to keep pushing and you're going to get out, which is totally fine. And you've got your trade plan in place. Do you have your trade plan in place? Do you know exactly, like, when you ran the trade in the first place, did you know how much you're going to lose and how much you were going to make?
Yeah.
I think you realize the bookkeeping is so important.
Yeah.
Like, you should have a written up trade plan.
Okay.
And this is what I do when I enter all my trades. This is the stock I'm looking at. This is what I see. This is the setup. This is my intention. These are the levels I'm eyeing. Do you want to look at the Discord and see an example for the trade I entered today?
Yeah.
So you're currently in the mentorship group. So this is the trade I just entered today. Obviously, one of the things I do as a mentor in this space is I share my exact trades. So anytime I'm putting on a position, I will call that out. And then when I go to close that, obviously for a win or a loss, I'll post that trade too. So that just, gives everyone in the group essentially the ability to follow along and copy my trades if they so desire. But you can kind of see this is my plan. So, I was looking to take my first trade. This was my first trade of 2024, my icebreaker trade. And, I was able to identify the ATH pullback on this chart. That was a very clear setup that's very defined. Obviously, we know that checklist we just went over. So I was able to actually check off all the boxes on there. And I was looking to short off that all-time high, okay, which was sitting at 364.87. You can see right there, that was all-time high in the 4 hours. Looking to short off of that back down toward the 15-day EMA. Obviously, we've got this daily support at 345.45. And then ISRG's all-time high was sitting at 369.69. So, we're sitting about 1.5% off of that. And that's where I set my stop loss, okay, with, a little room on top. So my stop loss was set at 370. As far as my take profit, that was set around 345.45. So when it comes to my trading, I have a very fixed stop loss. I have that area, obviously we've accounted for. If I hit that, I'm out. Now, kind of the concept in trading, and this is you hear this all the time, it's cut your losers quick and let your winners run. So you really, really have to be disciplined in never letting a loser just bleed out and continue to hold that position even through your stop loss and hope it's going to come back. You got to just get out of it. And that's fine. It's part of your plan. So I know if this thing hits $370, I'm out, whereas I have a more open-ended take profit. Yes, I have this baseline that I've set, 345.45. Okay, that is what I ran the risk to reward off of. That is an achievable target based off of my ADR calculator, which I'm going to set you up with later on when we get into a live account scenario. And I set this target to the best of my knowledge using the software, using everything I look at. We're sitting 1.5% off that all-time high, and ISRG was also sitting at 10% on the day. Okay, only thing to be aware of was the lower volume on those contracts, but I sized in according to my risk management calculator, and I'm trading very small size heading into obviously the new year, and then based off of my performance, I'll increase size as the year goes on. But I have this very defined plan, and it's even in more detail over inside my trade journal. And so you need that. You need a screenshot of the chart upon entry. And then when it comes to bookkeeping, the most important thing here is not just learning all these basic mistakes you'll run into. It's being able to have this data. We need this data to work with. And the more you have and the more you've kept track of and logged, it'll help me from a coaching perspective really guide you and really know where to take things. So when it comes to NVIDIA, next time moving forward, your next trade, screenshot upon entry, and then in trade Zella in your trade journal, under trade note, I want you to have your whole trade plan, your game plan here.
Okay.
Just a summary of the trade, the intention, your stop loss, take profit.
It's all the information.
And then screenshot the analyze tab, because you also right now you're thinking we were just talking and you're I thought the downside on this was this or the upside was this. And so you should be able to go back and look at the analyze tab before you entered. When you ran the position, you could see my downside was X amount, it was $20. My upside was $40, $50, whatever the case be. And so, in this scenario, in Uber, there's a trade that you've taken, you've entered, you've closed, you lost 8%. That's not bad. That's not a bad loss, 8.50%. Again, we're trying to really keep those losers small. And then you should have a screenshot of the analyze tab. And then you can really know, am I doing that right in the first place? Am I really simulating out this position correctly? Did you plan, essentially is what I'm trying to say, to lose 8.50%? Do you know?
Yes, I do remember that because that's where I set my stop loss too low, but
okay, so you did plan to lose about 8 to 9% on this. So you should have all of this in there. You should have all of this in the more you can keep track of, the better. So at this point, I want to take some time to answer any questions you have. And again, I'm feeling good. I know you've only taken literally 2 trades, 3 trades, but now we're into the new year, and now you're going to start hopefully picking up in your trading a bit. Obviously, if there's nothing there and there's nothing presented in the market, then there's nothing to take. And so just don't force anything is what I'm trying to say. Start being very diligent in your bookkeeping. And then obviously if you're out, you're working, you're busy, just don't trade. It's not worth it.
Don't force a trade.
Don't force a trade, but also if you like don't have the time to sit down and really make sure this is all done properly, you'll very quickly get behind on all this and you'll start just getting really overwhelmed.
Okay.
Yeah. Any questions? What other problems have you run into, kind of issues, beginner mistakes someone could learn from?
One mistake I made was, so underneath the Analyze tab, you can switch the date to see, you know, depending on what day you are.
Show me an example
So
everyone can kind of visually see. Okay, go for it.
So say 365 and then 345.
And that's your stop loss and your take profit.
Or yeah, let's just use these numbers for here. But if you switch the date for what day you're planning on exiting, it changes based on the theta, correct?
Yep. The longer, obviously, you hold the contract, every day it's going to be increasingly more expensive to hold. And so the idea is when it comes to, you know, before you're entering the position, we obviously want to have an idea and figure out to our best knowledge how much you're going to be up or down when you close that position. And the best way to do that is by going as far out, and when I say as far out, you should know, and that's something that you don't have now, but you'll know eventually when you have more trade data, and we're going off mine right now, your average hold period. So mine's 3 to 5 days, furthest out is 5 days. That's the longest I'm gonna end up holding in position. So worst case, it takes me 5 days to get out of this trade. How much am I gonna be up or down? The intention and the idea here is just to make as accurate of a calculation as to, you know, your P&L, at which point, you know, you might end up holding this trade the longest. So 5 days. And you're saying what exactly?
For one of the trades I took, it had a really good risk to reward for the next day, but I forgot to check for 5 days out where it just completely flipped.
Oh, interesting. Yep. Okay.
So that was just something that I had forgot to look over, forgot to check that.
And so the risk to reward looked really good. And if you'd closed it, the trade the next day, if you hit your target.
If it hit my target, it was like a 4 to 1.
Wow.
But if it switched, if it hit, like if we went out to 5 days, it was like a 1 to 4. It's completely flipped. So
I get what you mean. Wow.
Something to keep note of.
Okay, that's good.
Second question this is more for the software. I know that if there's, say someone throws a put and then there's another one for a call, you don't take it.
Yeah, if there's a put and a call, like a sweep with a put and a sweep with a call, I'll stay away from that trade.
Even if it's like, so I saw one, it was like 4 calls and 1 put, still don't do it?
Yeah.
Okay.
I still wouldn't trade that.
Okay.
Good question.
Another question. So you answered this previously. Say you're planning on exiting at like the 15 day. The 15-day changes each day.
Yeah.
So you have to kind of change your take profit, or
that's why I just say it's a fixed stop loss. In this scenario, based off of this setup, right? Your stop loss is at 364.87, and this is the trade I'm obviously in right now. And your take profit is at 345.56. The 15-day, and this is what you're saying, is going to continue moving based off of whether we go up or down, right? It is going to, it's moving average. It's changing. It's not the same. The best thing to do, and obviously this is a fixed area at where we're wrong. Whereas when it comes to where I'm taking profit, I want to squeeze the most profit I can out of each trade. And so if this thing, if say, and you really have to become familiar with the stock you're trading. And when I say that, just like go back, look at like previous days ranges, and the ADR tool is going to give you a good sense as to, that average daily movement.
like the percentage gain or loss throughout the day.
Yeah, this was a very abnormal day. So was yesterday. We're up 10% on the day. If this thing opens up and it's gapped down 5%, and I'm going to watch price movement, I'm going to see if we continue that momentum. Now that 15 day is going to slowly start coming up, and then it might get really close to meeting that 15 day. I'll get out. Now you have to, again, there's no right or wrong answer to this. But with this setup specifically, because in this case the target is moving, like just keep in mind that it is a moving average, it is moving, and that is also going to act as a support level. And we want to get out before it hits that, because that's our, like, theoretically you could wait and you could you could wait and see it test, but it's trade by trade. You kind of have to like just
Just no right or wrong answer.
There's no right or wrong answer. Okay. If this thing gaps down 5% and I'm up 55%, 60% on these contracts, I'm going to watch and see if this thing starts turning back around and moving back to the upside. I'm going to get out. Mm-hmm. Whereas if it keeps selling off, and then maybe the 15 days up here, now we break below the 15-day, and now we're trading back down toward resistance, then I'm going to hold it. You don't need a fixed take profit. Just know that you have to, and that risk to reward is, continuously going to be changing, but you got to watch the market and you got to play the chart and what it's telling you. There's no right or wrong answer. It's just like something you'll learn over time. That's where the experience comes in.
Yeah, that's just like kind of a question I had just because I was like,
because
if I set my take profit at the 15-day, it changes every day. So
yeah, and in 5 days, who knows where the 15 days is going to be.
Different.
So you got to look at our actual support and resistance levels based off the candlesticks, and then you'll just look at where the candles are trading in correlation to the 15-day, and you can make a decision and know that you want to get out before it hits it, more than likely. If price starts turning around, get out. You got to watch to see. We're up 10% on the day. If there's a huge gap down during pre-market and we open, down 5-6%, I'll wait to see where direction heads, and I'm getting out. I'm taking profit. You just got to keep your stop fixed. Mm-hmm. As long as we're being diligent in really setting these trade plans ahead of time and making sure that we're buying the best contracts we can, that we're trying to mitigate that risk, that we know we're not going to be taking huge losses if we're wrong. Everything, it'll all even out, and the more data you have, it'll become very consistent, and you'll be able to use that data then to make these kind of future projections on your trading as a whole and how you go about managing trades like that. And so that'll come over time. It'll come with experience. There's no right or wrong answer, and that is a great question. Okay. And I hope I answered that well enough.
That did answer.
If you're ever in a position as a trader where you're so set on something happening where you can't just let the market tell you in real time what's happening and make a decision based off that, where you're ignoring what's currently happening because you have this almost bias that you set when you entered the trade. And I'm not saying that means trade with emotion. I'm saying use what you know, look at a chart, see how it's moving, and then keep that stop fixed. And if that chart wants to continue selling off and you're short in this case, and we start breaking down through support levels, let that thing run.
Yeah.
And then, preserve capital at the end of the day and let your winners run. That's how you're gonna have these big wins. It's not that we want to go for home runs. We want to be consistent. But when you're setting a stop loss or take profit based off a moving average, you have to adapt as the market's moving.
Okay. Makes sense.
Yeah. But that's with practice, you'll learn more. Any other questions?
That just kind of moves into another question I had. Mm-hmm. So obviously with what you're using on the new software or whatever, it shows your average percent gain or loss on the stock. I've been using a 3 to 5% is what I'm shooting for.
Yeah, that's the easiest way to do it. Okay. 3 to 5% margin for profit on a chart is what I've always played within the restraints of, until I kind of created this new tool to kind of give me a better projection for that, because every stock is going to move differently. So some stocks will move on average 1% a day, some will move it on average 4 or 5% a day. And so again, I created a tool I'll give you that'll help you with that, but 3 to 5% right now is what you want to stick within as far as a margin for profit to the upside or to the downside. Just wherever your stop loss and take profit are within 3 to 5% is really going to be worth it, and not such an unrealistic target where you won't end up hitting it.
Mm-hmm. That's about it for the questions I got.
Awesome. Well, again, if you guys are interested in my mentorship group, the first link will be in the description below. You can head over to my website and see everything that is included and apply if you'd like to do so. With that said, subscribe for more. Stay tuned to see how Josh ends up doing after 2 weeks of paper trading. And we'll see you guys in the next one. Later.